Hey guys, it's Des here, and I quickly want to explain when to not take certain fair value gaps. And I don't want to waste too much time on this, so let's get right into it. So, before I show you guys actually on the chart, you basically don't want to take any fair value gaps that's already taken liquidity. So, what do we have here on ES? This is actually before open today. We had a high here that got formed, and right before market open, so this is a London high, and would be a London equal low near London Open. This was the low that was formed, and he had a nice move up, and then we moved down. We have an equal low here, and as you guys can see, before market open, price actually takes this out. On this move down, it creates a 15-minute bearish fair value gap, right? However, this is something you don't want to take. Why? Because sell side liquidity on this equal low, that was a London equal low, has already got taken out on this 15-minute chart. So this fair value gap would help accelerate price to this equal low. But since this equal low is already taken out, this fair value gap invalidates, and you don't want to be looking for shorts. Yes, the market can still push down, but this is where you go in a smaller time frame and see what's happening, so you don't form any type of wrong bias going into the market open. And let's see exactly what happened before the market open. So we have this 1 minute candle here, right? The green I'm just going to have marked out is actually the 15-minute fair value gap that I was talking about. And we basically want to see price push through it because liquidity has already been taken out. So price moves a little bit lower, not really much happening. And now you guys can see that we swept price and we're starting to form some type of structure here, right? What is structure? Basically where price is failing to break out. That's basically structure. And what we're watching for, since sell side liquidity got taken out, is a break of structure to the upside. As you guys can see, we got a break of structure to the upside, and then we got a nice continuation on the break of structure. Obviously this, I like to take a fair value gap entry. So what I like to do is the candle that formed the break of structure will create the fair value gap. So we'll have something like this. And now to confirm our bias, we need price to trade back into this area and hold for further upside. And like I said, this is just, obviously we took out that sell side on the 15 minutes. Now we look at the 15 minute here. We're trading into it and we wicked. It obviously looks really bearish right now. Everyone's like, oh, we're wicking on the 15-minute chart, whatever the case may be. But remember, we already taken out the sell side liquidity. So there's no point in looking for shorts down here, especially when the 1 minute chart just broke structure after the sweep. I'm going to remove this because I think you guys get the point where the 15-minute fair value gap is. And now what you guys really want to be looking for is any equal highs or lows that ES could, most likely be targeting, and have those as take profit levels. So I see some clear levels here. I see an equal high here, and then I see equal highs here. And then obviously the next equal high that I'm going to point out to you is actually within this trade that forms. So now we wait. Price trades back into this fair value gap. Still wicking, still just holding this fair value gap. Not really showing a lot of downside on this play yet at all. Boom, boom. And then we get another break of structure here. So this confirms that this fair value gap is actually holding. Most likely, the best case scenario, you want to take entries on this fair value gap here, and then you take it to your take profit levels. Even if you missed it, you can still wait. Price trades back into this order block. This is the order block here. Let me mark it out for you guys. This is the order block. This is the mean threshold of the order block, which is the midpoint of the order block. And now we created equal highs up here as well. So if you missed the fair value gap entry, you would want to target this order block entry. Once again, go on the 15-minute chart, right? A lot of new people who trade smart money or ICT are trying to short this 15-minute fair value gap, but you got to realize that liquidity has already been taken. If you guys are taking anything from this video, just put, if liquidity has been taken, the fair value gap will most likely invalidate. I say most likely because sometimes we do continue lower. But if you look at the context of where we are on the daily chart, we're bullish. NQ is pushing bullish. We taken out this equal low from London, and now we had these remaining not equal highs, but remaining highs from London session, right? So now let's break it down back on the 1 minute chart. The 1 minute chart is telling us, we had a break of structure. We traded back into this fair value gap. We got a break of structure on right here after the fair value gap got tapped into. We have an order block. Price came near the order block here and is looking to reverse back up. And now what I also want to show you guys is off this impulse candle, people tend to find a bearish bias as well. So they would want to short this fair value gap here, thinking the price is going to retrace and hit this, keep continuing to the downside. However, keep in mind, what is the 1 minute chart telling us? The 1 minute chart is telling us that we had to break a structure. We're holding this fair value gap, so there's no reason to take shorts yet. If you want to short here, we would need a displacement under the sweep that occurred. We would need some strong displacement under this area for us to actually go short. So keep that in mind. Price starts to consolidate. We get this mean threshold entry here on this order block. As you guys can see, we wick here. Still, just in this area, holding this 1 minute bearish fair value gap that, you really don't want to be taking because the liquidity is drawing higher. We have equal highs here. We formed equal highs here, and we formed equal highs here. So you get your mean threshold entry on your order block position. You keep your stop loss under this low here that, the fair value gap was formed. Oh, that's a short position. We want a long position. And what you want to do is basically target, equal highs. And you can also, if you want to leave runners, whatever, you can have your runners at that London high. And you have your stop loss right under here, a few ticks below the fair value gap that was formed here. Now let's continue playing this. One more tap into this fair value gap. Once again, no reason to panic if you guys had a little bit of drawdown or whatever. We are still holding this fair value gap. We are still holding this order block. All these are wicks, and now we're just still looking for upside. And I believe at the same time, NQ was showing relative strength here, and it was actually moving up. So, you look at all the indices across the board, it give you more confidence in your trade. More consolidation, and finally, we got this break of structure here. TP1 already got smacked just from one candle, and now we're just basically targeting these equal highs. One more equal high taken, that's take profit 2. The TP1 got hit on this equal high, TP2 got hit on this equal high, and then the third TP would be the final equal high that I was targeting. And then boom, there would be TP3. And once again, where are we bouncing from? We had an order block here. Let me delete this. We had an order block right here that got tapped into. The mean threshold would be the midpoint of this. Order block got tapped into, and then we basically took out that equal high that I was talking about. Now, let's review something we learned. So now, remember how the 15-minute looked before the market open, and now look how it looks now. You guys would be like, oh, wait, this 15-minute fair value gap just got entirely violated. Well, yeah, it makes sense that we got this 15-minute fair value gap got violated because, once again, that sell-side liquidity was taken. The 1 minute was showing us really nice movement to the upside, right? We had a sweep, break of structure, fair value gap was holding. We had, multiple touches into this fair value gap. We had a touch into this order block that held. And then we created even an equal high along the way. So we had an equal high, equal high, equal high. We took out that London sell side, and we're basically targeting that London buy side from London session. And this is why the move happened so early, because during pre-market, it was like the play was already in movement. And this is what comes with the kill zones. 1 hour before New York is actually part of the kill zone. So you can start looking for some entries or setups there. And as you guys can see, we got this really nice setup today on ES, and also NQ was running at this time. And that's pretty much it. So I really wanted to show you guys what fair value gaps not to take, and basically why you don't want to take those, and which ones to take and why you should take those. So I hope this video helps, and until next time, I'll catch you guys.